Learn faster, deeper, and smarter. This is happening with Q. Decrease in the number of daily confirmed cases and death cases of COVID has driven many U.S. states losing enforcement of masks, so on and so forth. Recovery has been the new buzzword among the American media. However, as the economy is on the way back to normalcy, negative impact of the measures taken in response to the epidemic is now more apparent. U.S. economy is facing multiple risks, including inflation, deficits, unemployment. WSJ reported on the 18th that as inflation rising about 4% last week, the market now focuses on the danger of inflation, which caused stocks falling. Two references have been mentioned. In 1987, the stock ended in a crush shortly after inflation passed 4%. In 2007, the start of the decline in the S&P coincided almost exactly with inflation past 4% before turning into a financial crisis. Concern about inflation risks in the US is spreading. Many more authoritative voices believe that current upturn in the US economy could be nothing more than a dangerous bubble. According to the FT on 19th, Lawrence Summers, the former US Treasury Secretary, has sharply rebutted the Fed Reserve as it had underestimated the risks very substantially to conventional inflation. Summers accused the central bank of creating a dangerous complacency in the financial market and misreading the economy. Bringing primary risks involve overheating, subsequent financial excessive leverage, and subsequent financial instability. Martin Wolf on the same day wrote that by historical standards, the US now has near zero interest rates, exceptional monetary growth, and huge fiscal deficits with bubble phenomena everywhere in the stock. Wolf also mentioned a strong headwind, an unexpectedly weak employment report. Last month, the US added just 266,000 jobs, while the unemployment rate edged up to 6.1%. CNBC reported hiring was a huge letdown in April, a much less than expected. NYT on 18th commented, hiring in April was a quarter of what economists has expected. It was a stark reminder the pandemic isn't over. A robust recovery isn't guaranteed. US economy still faces a long climb back to health, and the most vulnerable workers will inevitably be the last to benefit.